Good day, everyone. Thank you for joining us once again here at Seaford and Brew for our economic briefing. I am Jamie Sumner, Chief Analyst, and for this briefing, we want to look at the jobs report from last week and then look at some of the ISM index that came out both on the manufacturing side as well as the non-manufacturing side. So overall, we had that jobs report come out a little disappointing. We're down to 121,000 jobs created in September. However, we did see an increase of 50,000 jobs in the revision for August. So we saw a pretty significant increase in August, which helps. So we kind of had this number come down to that 121,000 for September. But when we look at the overall areas that jobs were created, very similar from what we've seen in past months. We had the construction adding 23,000 jobs, continues to be strong, as well as warehousing and transportation added 23.8 thousand jobs. And then down here, which has been a consistent performer at that healthcare and social assistance, added 29.8 thousand jobs. So we continue to see that area churn out these jobs, and the lion's share of those are from the healthcare industry. Looking at those items that have actually declined, retail trade actually down by 20,000 jobs. We see this wane a little bit. We'd anticipate getting into the October, November timeframes to see an influx of employment or job openings into that area. But overall, hospitality, leisure and hospitality, also down by 17,000 jobs for September. So we see a little bit of a pull off there. But when we're looking at the overall hourly earnings, we can see that the hourly earnings up to $27.24 for September, and that represents a 2.8% increase in year over year. And that number is similar to what we anticipated, but down a little bit, only by 0.1% from where it came in August. So we're down a little bit on the overall earnings per hour. We'll look at later this week when we see the PPI come out, as well as the consumer price index, to see where those inflation indicators are leading us. But for right now, still no real big push up in those earnings in terms of our hourly earnings. And when we look at the unemployment rate, U3, you can see the official unemployment rate down by 0.2%, 3.7%, very, very low. And the U6, the all-inclusive number, down just 0.1% to 7.5. Up 0.1% to 7.5. So we saw that float up a little bit. Still have that disparity between the two. That spread is wider than it should be in a situation where we have such a low unemployment rate. Looking at the non-manufacturing and manufacturing ISM index, we continue to see numbers above that 50 mark, suggesting a growing economy. In fact, here we are for the non-manufacturing, 104 months of growing direction. So we continue to see strong numbers in the ISM index. Overall, when we look down, we have positive increases. It was the overall index up to 61.8, up from 58.5, so showing the continual trend upwards. When we look down the different areas for the non-manufacturing, a couple of items to just note here. Prices up by 1.4%, and then we have imports at 3, up 3, so showing a greater amount of imports. But the interesting thing is the inventory sentiment 0, so staying equal, suggesting Nothing really changing, but it's been, the overall direction is too high. So we see these non-manufacturing suggesting that their inventories continue to be too high. We've seen this in some of the inventory numbers of coming out, haven't been really strong in building those inventories. So that could suggest that when we see that third quarter GDP come out in a couple of weeks, we might see a continual reduction in inventory. So we'll see. Will be interesting to see when that comes out if that is the case. But overall, when we look at the manufacturing side, it came down slightly, the overall index, just by 1.5%, but still well above that 50 mark at 59.8. So very strong. And the overall business activity and production is actually up. When we look at prices, however, prices have come down. Here we're down, that index down by 5.2%. And we look at the overall inventories, again, inventories down 2.1%. So that inventory play that typically we would rely on historically to replenish those inventories, add to GDP, doesn't seem like it's going to be a play in the third quarter GDP numbers as they have been coming out throughout the last couple of months. But overall, when we look at the overall economy, we continue to see growing and faster in the non-manufacturing section, both growing and faster. So we continue to see this stronger economy. The IMF came out this week suggesting continued growth, pulled off a little bit in the 2008 forecast, and in the 2019 pulling off a little bit as well. So showing not as strong of growth as they were showing back in July, but we continue to refine those numbers. Could be suggesting a little bit of a slowdown in the overall economy come the fourth quarter. So whether or not we'll be able to sustain the 4+ growth rate for the next 2 quarters is in question. But we will continue to update you on these numbers. We look forward to talking to you again. Have a great week, everyone.